Welcome to the Truth About Real Estate Investing show for Canadians, which started back in 2016. We're at somewhere over 300 episodes, all an hour. Each is an hour-long episode of hour-long interviews of many of the best investors in Canada. We are one of the oldest podcasts, probably actually the second oldest podcast in the real estate space. We're one of the most listened to and downloaded and highest rated podcasts, and we've kept it pretty real on this show. The show is named The Truth About Real Estate Investing as it was inspired by my experience of being a full-time real estate investor since 2010. So it was inspired by the number of unsavory characters. There's still many of them, and many of them are making news, rumors. All those things will be flushed out probably in the near future. Bankruptcies and lawsuits and whatnot. But yeah, again, unsavory characters, poor investments being promoted, securities laws violations, abuse of other people's money and credit, courses out there, and we're seeing many hardworking Canadians lose money. And what, in my experience, my journey has been very boring. And in my experience, real estate is a pretty all but guaranteed strategy of getting rich. I say all but guaranteed because it can be done wrong. Thankfully, in my journey and my seeking of the truth about how to successfully invest, it's worked out. So my strategy's worked out. My journey started with $30,000 in student debt when I graduated business school shortly after September 9/11. The subsequent recession that followed, and the dot-com bubble burst. So it was a terrible time to get to. A terrible time to be graduating. My wife and I now own an 8-figure portfolio consisting of mostly small multifamily and student rentals. And we only have one partner on one of the properties. So it's generally all mine and Sherry's, and plus the bank, who has a good portion of their own money in these deals. My wife Charity has around 300 real estate investor clients. They have over 500 real estate investor clients, almost all of them with corporations. So they're generally successful investors, and successful people financially. And I have over 350 real estate investor clients, including 45 self-made real estate investor millionaires and multi-millionaires. The lessons are plenty between the investors I've masterminded with, including today's guest, Aaron Moore, my clients' experiences, my own experiences, and the 300 plus successful guests that we've had on this show. My wife Cherry and I have found a strategy that works for us with our busy schedule. I consider ourselves side hustling investors because our businesses keep us busy, and we have young kids as well. I hope you too find your own efficient path that makes sense for your situation with your resources, your skills, experience, your age, the time you have available, with the help of this podcast and the many education events that we have, and also we do coach one-on-one with action takers who want to work with us directly, those who prefer to work with professional service providers. Unfortunately, we haven't reached everyone, and even worse, many have lost money on get-rich-quick schemes involving high leverage or flips, or both. A listener of this show, Jay, sent me an article just yesterday titled "House Flipping Influencer and Life Coach Hit with Hefty Fines and Bogus $400 million training program." The program didn't cost $400 million. It was I'll explain it in the details. Mentioned in the article is Dean Grazioli, who agreed to pay a fine of $1,250,000 as laid down by the Federal Trade Commission in the U.S. That is a massive, massive fine. $1.25 million a fine. I first learned of Dean while following Tony Robbins. Tony Robbins being the author of Money, Mastering the Game. Tony endorses Dean Grazioli, and Dean is the author of Millionaire Success Habits. Dean was Tony Robbins' go-to for investing in real estate. I remember watching Dean's commercial, walking across his property, which was a massive estate. I'm guessing it was in Florida, and he was greeting his young girlfriend and hearing his pitch. I don't remember exactly what the pitch was about, and this was years ago. That's why I don't remember all the details. But I remember that his investment model was something I hadn't seen done successfully. It was hyper aggressive. It was so aggressive that I immediately dismissed it as being too good to be true. Now, according to the article, 7,000 people attended a free introductory course that was promoted by Dean Graziosi. 70,000 of them, so 10% of them, paid the $1,000 fee for a 3-day course, and then 30,000 of that 70,000 paid $40,000 more on courses and coaching. FTC investigators say that the courses did little beyond explain the basics of real estate investing and were primarily designed to upsell students on more expensive classes. That was a direct quote from the article. Again, the article link is in the show notes. If you Google it, I'm sure you'll find it. Sadly, this all sounds too familiar to me. I spoke to an investor last week who paid $15,000 for courses and a coach. And that investor bought a pre-construction condo from a realtor that sponsors that club, a condo that will bleed her money. That same sponsor sold the investor a non-conforming duplex, so non-legal, non-conforming duplex, and did not disclose to the investor that the house was located in an area within the rental housing licensing program. From what the investor explained to me about the property, it has zero chance of passing a licensing program. Not only that, if there was a fire inspector, if a fire inspector went there today, that investor would have to evict tenants to the streets or face severe fines. I've seen investors fined $1,000 a month. Pretty hard to cash flow when you're being fined $1,000 a month, and I'm sure that things escalate from there. Those are international students living in the property, nonetheless, and they will have nowhere to go. So I don't have $15,000 or $40,000 courses or coaching to sell, but I will get a call on investors like this one, who need help, and and that's what I did. Got on a call, explained to her. Just a couple things. I met this investor actually one of our tours. I invited her on another one of our tours so that they could see both husband and wife. I invited them so they could see how an actual small multifamily conversion is done properly. So we toured 2 properties. One was my client's. One was a conversion in the works. Anyways, I also introduced her to Andy Tran of Sweet Additions to get her on the right path to getting that property legally suited in the basement. Speaking of legal suites, we will be touring actual small multifamily income properties in and around the $400,000 mark this Saturday, June 3rd, east of the GTA, where one can actually cash flow. So if you want to learn how our successful clients invest for themselves to create generational wealth, no get-rich-quick schemes, but this is to us, it's rather boring, systematic, proven process. If you like those things, systematic, proven, located somewhere with high demand for both buyers and tenants, this is side hustle investing in its best, so that you can go get back to living your life. The cost is a measly $20 plus fees and taxes, and all proceeds go to charity to provide impoverished children with warm winter clothing. For details, you can go to our website, truthaboutrealestateinvesting.ca. There's a link there for you to get more details and to register. Again, this Saturday, June 3rd, starts at 10 a.m. in the morning. And on to this week's show. As mentioned, I have an old friend of mine, Aaron Moore, on the show this week, who is an extremely successful real estate investor, a wholesaler and flipper. Aaron and I used to meet monthly to mastermind for about 3 years or so. So I know him well. I know him very well and can verify that he is a nice guy. And I'm quite confident he's much more successful than 98% of the real estate influencers on Instagram. Aaron is the only wholesaler I know who guarantees the purchase from the seller, including the time he got caught in the downturn, this most recent downturn. He knew he was going to have to take a loss, but he did it anyways. He followed through on the contract and his word that he would purchase the property from the seller at the stated price. Aaron takes us back to 2008 when he got started delivering hundreds of flyers and hanging bandit signs. Bandit signs are they're less professional looking signs that are hung on traffic lights that say like I buy houses and there's a phone number to call. Soon after, he cracked the code on Google SEO and AdWords back in 2010. And it's just been gangbusters for him since then. Aaron's one of the best at generating leads for off-market properties. Hence, he has successfully wholesaled 66 properties in a year. Aaron walks us through how he grew his organization, number of employees, who his first hires were, his journey from he used to do harder deals, and now he's looking for easier for his long-term holds, what he thinks of the current market, have we recovered, are we heading lower, plus a whole bunch of several pro tips. I hear novices making all sorts of mistakes out there. Honestly, if you listen to this podcast, I am purposely digging into our guests to extract those pro tips so that you can avoid mistakes and trade in real estate like a professional, like an Aaron Moore. And if you can believe it, a scammer impersonated a seller, leaving Aaron as the buyer. Aaron's actually now in limbo because the seller wasn't who they said they were. There's a real seller out there who's not living in the country. The property's vacant. It's a bit of a mess. Aaron will explain to you the story. And according to Aaron, these scams are becoming more common. So you do not want to miss this episode and listen to it all the way to the end in order to, become a good investor. To follow Aaron, his website for investors is www.housedealsgta.ca, housedealsgta.ca, and for people who want to sell off market, gtahousebuyers.ca. Please enjoy the show. Hi, Aaron.
Hello, Erwin.
What's keeping you busy these days?
Well, business as usual, growing my company, so it's all real estate related, so that's what I do.
And I imagine it's been busy. Has it ever not been busy? Are you busier?
We get lots of phone calls, we get lots of problematic, sellers with challenges and problems, and since the downturn, there's certainly a lot of people calling us, so it does keep us busy. And then there's, I've certainly had some staff challenges over the past year with the team, people coming and going. So it's sometimes it's hard to match our capacity with the leads coming in. So
are you seeing more leads, more distressed people, more people are wanting to sell?
There's we're seeing some tough over leveraged challenges right now. So people really with the over leveraged houses, like second or third mortgages, it's more than they're worth right now because prices have dropped significantly over the last year. I guess if they refinanced back in early 2022, then there's they're over leveraged. We're finding it, and then there's we're finding some older houses that need renos, and if you look at the reno needed, where the mortgages owing are, and then the future value, there's just no room either. So it's kind of, they're over leveraged given the renos needed. So we're finding these sort of problems. But in between, we still find enough people we can help out and buy their house and make it win-win-win for everyone.
Right. So I was wrong. I gladly admit when I'm wrong.
Yeah.
I was thinking that there'd be so many distressed sellers, the spring market,
yeah,
because we're middle of April right now, as we're recording. I thought there'd be a lot of distressed sellers that would actually bring down the price bring down the average price of housing. And every market's different,
yeah.
But I thought it'd be noticeable enough that we'd actually see it in the data. You're shaking your head?
Yeah, I assume the major problem is still the demand and lack of supply. But we're just like there's.
I know we both assume, but you live it.
Yeah.
We both live it.
But there's, it's like people, with people with the problems, there's some, but like a lot of them will just list on MLS, and then those houses will get eaten up, and
right.
There's just still not enough supply. So I don't think there's right now there's not a large enough basket of motivated sellers or people with these major problems, and some of the ones who are like the market, I am seeing more like just this year. So this spring, the over leveraged problems come with the over leverage. Mm-hmm. So those are going to go power of sale at some point. So I'm not sure we've been seeing the power of sales on MLS recently, But I do see more power of sales coming. Are they going to be great deals, these power of sales in the MLS? Probably not. I don't think it's going to be, the quantity's not going to be huge enough to make the market go back down. Personally, I think the worst is behind us, and we're going up until the next catastrophe. The next thing that rocks the industry and lowers prices.
Right. Because I actually think most of the public doesn't realize. I concur.
Yeah.
For the market that we operate in because we are mainly starter homes, on ground, on land.
Yeah.
Like for us, based on our data, what we're seeing in terms of pricing, the bottom was last August.
Yeah.
So we're well past it.
Yeah. I think it's done. Like the bottom's gone. So, there's still a lot of people with equity. So if you got a ton of equity, which I don't know the stats, but if someone looked into it, there's a ton of, I'd say the majority of homeowners still have a lot of equity.
Mm-hmm.
Prices have gone up so much, people have owned for such a long time. So that kind of buffers a lot of the problems. If you got a lot of equity, you don't have to stress out so much. You can sell your house at a casual pace, get a loan against your property, then sell it at a casual pace if you get into financial trouble. So you have just more options if you got equity.
Right. And like you said, there's buyers out there.
Yeah.
Because in my experience, we're not seeing a lot of power sales. I actually think that a lot of them are getting done as pocket listings. Right. So they never make it to the MLS, to the realtor.ca.
Yeah.
So my theory is proving wrong. That I thought that spring would be the bottom. Mm-hmm. It looks like we're past the bottom.
Yeah. And the power of sales will be with private lenders. So, we'll see what, private lenders are probably, with the big banks, they go certainly more on MLS. The private lenders, I'm not too sure what they do with as far as selling and disposing of properties, but they probably find ways to get around certain rules and do the pocket listings.
Yeah, could be pocket listings because they may still likely still list with a realtor, but even the realtor may already have buyers.
Yeah,
or buyers within their own brokerage, for example.
Get it done quick, get it out of the way. Yeah.
It's just my observation is, and just from I have a lot of friends in the industry, it really seems like the demand is still greater than the supply, even with the most distressed sellers we've seen in. Well, how long you've been around a long time dealing with distressed sellers. I've been doing this since
2008 full time, and
so you went through the financial crisis.
Yeah,
lots of distressed sellers, right?
Yeah, lots of that. I'd say last summer, so summer 2022, that was when there was we were getting a lot of calls from distressed people. But part of the distress was the neighbor sold for so much a few months ago and I can't get that, and
will you pay me that?
And then they keep chasing the market down. Until it really becomes a significant problem, and then sometimes people just keep chasing the market, and then they get themselves into a real situation, and then they really gotta take a haircut.
Right. But so how does the recent downturn compare to the worst you've seen previously?
Compared to the worst,
and also I think we need to take a step back.
Yeah,
like you're as far as I know of you, you're one of the most well-known higher volume wholesalers. Wholesale. So explain what wholesale real estate is.
Yeah. So wholesaling, we're going out, we're buying properties at discount, likely from a motivated seller, someone with problems. It's people with major fixer-uppers, power of sales coming their way. They want to just sell real fast.
The bank's coming to take the property.
Yeah. Or no one else is going to close in a week or two. So they call us.
And you're buying someone has problems.
Yeah, we're buying problems, but we're buying at a discount to take these problems and stress and just make it easy for the seller. And
just to because I want you to spell. I want the listener to have a better an idea of what these problems are. These problems that you're dealing with.
Yeah.
How often would there be major construction issues?
I'd say major rentals. 70 to 80% of what we buy it needs some rentals. Needing work, needing renovations, and there's a whole spectrum of that. Sometimes it's people just embarrassed of, maybe a dated house or a worn house. And sometimes sometimes they're unlivable, but people are living there. I did a house some months ago, the holes in the roof were, you could just climb up through the roof from inside the house to the holes in the roof. And so there's water coming for, I don't know, possibly years.
Right.
You know, of course, that creates wood rot and mold and a host of other issues.
So no bank is touching that.
No bank will touch that.
Yeah.
And
they'll laugh at you.
And, you know, someone's living there. They're extremely, how they got in this situation is, you know, it's obviously a life is hard kind of time in their life. And they're embarrassed about it. They don't want this publicly known. You know, they didn't always live like this, right? So it's tough. And we just want to make it like easy, stress-free. Just make it, you know, take the problem off. You know, they understand they're not going to be maximizing their equity, pulling out all their, you know, whatever they're not there to maximize their equity. So they're not there to sell it on MLS, hold offers, have massive showings. That's not their cup of tea. So, do you want to talk about more problems or talk more about what is wholesaling?
This is what I want people to know, because like, you know, you've dealt with these people. Lots of people buy courses, and they're marketed as something, and they don't know how gross it gets.
Yeah,
because I'm sure you've dealt with hoarder houses.
Oh, and like the
cat people.
Yeah, like when the animals and the little kids take over the house. Like sometimes, you know, I think of some of these single mother houses I've been into. You know, whatever situation puts them in a house that they can't manage. And, you know, they got pets, they got kids, and for some reason life's out of control. But it's like the cat urine smell. The feces is everywhere in the house. Like, it's just out of control. They can't, it's not within their power to clean things up and to fix the problem.
Yeah. Like, there should be a scratch and sniff before people buy a wholesaling course.
Yeah. So
this is what you're getting into.
Yeah.
That is the smell of money. Right?
That, it's like, you know, problems equals the money. So the smell, the
this
problems.
This is not sexy. This is not Lambos.
Yeah, it's not beautiful houses and marble countertops. It's houses that are falling apart in disrepair. And you know, a common situation is the inheritance. Someone inherits a house. Yeah, great, fantastic. What a great blessing to them. And then, you know, a year and a half later, it's like the house is falling apart. They're not maintaining it. Things are going downhill. Gutters are hanging off. Just in the last couple of months, I was looking at a lead with one of my sales reps, and it was inherited. So I just had some notes, looking at their notes in the CRM about this, and I said, you know, it sounds like the kind of house, the situation we buy from, it inherited, you know, needs some rentals. And then I looked at it, Google Maps. So, you know, Google Maps has the date. So one picture of the house was 2020, and then, you know, you just zoom over to get the other angle, it was 2022. So the 2020 looked beautiful and well maintained, and then 2020, after inheriting, it was like all overgrown and a mess. So that, like, it's just a common scenario. So people kind of get themselves in these holes, and we're here to kind of just make it easy. Yeah, we're going to make money, but we can, you know, get them out of this.
And it's not easy either dealing with. I shouldn't put words in your mouth. Yeah. How is it dealing with these sellers?
Yeah. Well, hey,
they're all
you know,
they're all in good health and good spirits. And
we just bought one in the last month, and this is one, you know, our company closed on ourselves. You know, we're a little lax and lenient sometimes. Like, normally I would have done a holdback with the lawyers for this kind of person. I knew they weren't going to move out on closing date, but I also, you know, I'd talked with them myself over, you know, months. So I was comfortable enough, but, you know, I know they're broke. They're not moving out on closing date, but then it keeps dragging on. So a week after closing, they're still there to ask for more and more days.
These are the sellers or tenants?
The sellers, yeah.
Oh,
the sellers, yeah.
Okay.
You know, they've got, you know, a large amount of money from the sale now in their account. So it's like, please just get a hotel and move out. So I did, you know, at some point, I gave them a few days of leniency, but then my guys, I send my rental guys there who are going to do some cleanup and demo. So they actually helped them pack up their bags and carry stuff out to the garage to just get their stuff out of the house. Because, you know, typically when we're buying, we're saying, take what you want, leave what you don't want. But then the second day of them still being there with my guys trying to clean up and demo, I said, listen, like, just demo the kitchen. They got to go today, get a hotel. Like that's it. Like, so, sometimes it's just, yeah. If you keep being nice, they'll keep kind of using and abusing you. So at some point, that's what we did. We just started the demo. At the end of the day, put a deadbolt on, boarded the windows, and on they go. But you got to work around these people sometimes.
Right. Are they cooperative? Is there tears? Is there anger? Are they happy?
People are thankful. Like these people are very thankful. It's just they need a lot. They need a lot of maybe hand holding or assistance just to. And listen, we deal with a whole variety of people. Sometimes we're dealing with people on the ball, like they just need a fast sale because they got to close on something else, and they're willing to sell to us at a discount to do that. And they're very on the ball, capable people. Mm-hmm. Other times it is these people who've been maybe, let's say, a challenging life situation for a while. They're broke at this point. They need the money from the sale of the house to move on.
Right. So they're house rich.
House rich, cash poor, and we got to be lenient. And typically, I don't like to let them stay after closing unless I have a major holdback with my lawyer. But there's been a few times like in the past month where I've let it happen, and it's always a concern.
Could you imagine not being, if they were not at least house rich?
Yeah.
House poor and cash poor?
Yeah, that would be trouble. And we've had that before, but you got to make sure you get the vacant possession, or have. We've done security holdbacks. And another one, I bought in the past 2 months, and they just moved out. I'm told yesterday, and I'm sending someone today to verify it's vacant. For that one, we do have a large security holdback, so I'm not too concerned that they will never move out if I have like $50,000 with my lawyer. We deduct penalties from that if they move out later than expected.
Right. And just for context, to share, for example, I had a student of another program. He bought a house off a wholesaler, a local wholesaler. This is I think it's Sarnia, so nothing to do with you. But he had negotiated vacant possession. Is rented. Tenants were there.
Right. And
then on closing day, was not vacant possession, and the wholesaler told them, "Oh, they'll move out. Don't worry." And this gentleman, the student Ben, who shared on the show, like he just took their word for it. And I looked at him like, I would have held it back a lot of money. Yeah. It's a tenant.
Yes.
It's probably even harder to remove than the old previous owner.
Yeah.
Right.
Yeah, you don't like.
And only not poo-pooing anyone. I'm just sharing that lesson so people can learn from it.
Exactly. And often, if I'm like, I don't always do this myself, but I have often, if I'm closing on a property, I'll go the morning of closing to see how things are going. Does it look like they're moving out? Does it look like they're absolutely not moving out? Mm-hmm. Like, I want to see, maybe they've already moved out. There's good progress made. There's boxes there. There's a moving truck there. Then, then if I see all this progress, I'll probably be pretty lenient. Like, okay, sure, just if you need to sleep over the night, then move out tomorrow. But otherwise, it's no. We need a significant holdback. Otherwise, you're not getting the rest of your funds today.
Mm-hmm. See, and I just want to express this to the listener. Yeah. We had an amateur, even though he spent like $50,000 in courses. He did no holdback on a tenanted property. Yeah. Right. Versus you held back $50,000 from the previous owner. Yes. Like your situation is likely easier.
A lot easier.
And you actually held back a good chunk of money.
Yeah. Yeah.
So good on you.
Yeah.
The difference between what a pro does versus an amateur.
True.
Right.
Yeah.
True.
nice to be secure most of the time. There's always risk out there, though.
Right. Because you've seen the other side.
Yeah.
When you don't hold back.
Yeah.
Right. Have you ever had one? Has it ever gotten really bad?
I've never had it really bad. I do have. I've had it. Well, okay. I'm trying to think. Someone we assigned it to. It did get. It all worked out very well in the end, but we had to lower our holdback because the seller had so many mortgages, liens. It couldn't close unless we lowered our holdback. Oh. I think we had a holdback of, let's say 50, somewhere between 15 and 20,000. It was like maybe 17,000, but that holdback did get eaten up, but it was used to and this wasn't me. This was an investor I know. We've done multiple deals with him, wholesaling, and he had to use that money to basically pay for a rental to move this seller. This happened around the COVID time as well. So COVID hit. This was early 2020. COVID hit during this long window. She had to move out. So she had months. She stayed after closing where she could move out. And it was kind of okay because it was during the winter months. Unfortunately, it was the winter of the COVID hit. So of course, lots of excuses once COVID. I can't move out because of this, that, and the other. All kinds of reasons. The security holdback, which is small. I think that's the smallest one we ever did because we had to because all the equity was eaten up. It all got used up. In penalties, I think we typically do like somewhere between $400 to $500 a day penalty that out of their security holdback if they don't get out on time.
It's a good Airbnb fee. Good.
Yeah, so it's a significant. It's a penalty. It's like, please leave when you say, otherwise this is happening.
A hotel's cheaper.
Yeah, a hotel is much cheaper. But all worked out well. It took extra. Like we gave this person months to move out, but then it took way more months to actually get her out. But then it all worked out great because house prices went up so much, and the investor ended up flipping it, making a bunch of money. It was all worked out well eventually, but with some stress.
Yeah, and it's not worth it.
Yeah, it's not worth it, no. But it all worked out well. I was very happy with the end result. But
because to find return, there's often grief.
Yeah,
it's just something, especially during this downturn.
Yeah,
just something that keeps popping up. Maybe I'm too pessimistic, but there's like no easy money.
Yeah, and I've done multiples of these deals where I have a significant holdback, and I've had people move out, 5 days later, 15 days later than expected, and hey, my lawyer sends me that check, that $500 a day. That's pretty good, So I'll take the penalty.
So again, you've seen a lot. You're around in 2008.
Yeah.
How is this time better or worse? Because you were around during the COVID crash, which was short. You're around the 2017 correction.
Yeah, COVID was really quick. This seems to be going on. It's went on a bit longer, right? I think this one's going on longer. It's certainly taking our investors that we wholesale to, taking them longer. Maybe I'll compare to like the COVID crash, maybe even 2008. It's taken them longer to sort of get back on, but now I think the majority of people they see that okay, market's going back up, things are moving, things are active in the MLS markets. They see things are moving, so it's like the investors are back in now basically. So they're flipping again, they're buying rentals. I think they agree with us. The bottom's behind us as far as we can foresee. So they're back in. It took investors a long time, and it might just be the last month or two that we really see the buyer enthusiasm again. So
it came quick too.
Yeah. So, but it was a long time where there was a lot less buyer activity from late spring last year. So it's getting close to a year, but in January, February this year. So it was almost a year of a lot less buyer interest.
It's been about a year, you're saying?
Yeah, less like at least 3 quarters, like 9 months.
That long.
It's not that long. You're right. But it was. I think
because we're both old. So.
Yeah, I know.
I'm old.
I do tell my team we do. There's always going to be downturns, but here in the GTA, my experience is it's maybe 10 to 15% of the time. Like 80% of the time, we're on the upswing. Yeah, there's going to be some downtime, like downturns, and we're not going to do as many deals or make as much money, but you got to have the long-term vision.
Right.
Hang in there.
So, I'm sorry, because I'm just a geek. I always have these questions. Oh, and also, just to give some context as well, I'm on Twitter probably too much.
Yeah.
But for months, it was all loss porn. As in, like, people would show like screen captures of like a house Sigma. So you see what someone bought it for, and now they're selling it for like $200,000-$300,000 less. And this was what was all over. Those screen captures were all over Twitter.
Yeah.
Now it's more like these prices are ridiculous. It went for this much over asking. I can't believe this is what $1 million gets you in Toronto, like a 2-bedroom bungalow.
Yeah.
So the it's completely shifted to prices are high.
Yeah.
In not a long time.
Yeah. And you can be thinking like prices aren't as high as they were in early 2020. So, and we've been doing this for years and years. So we're always hearing people say, calling out for doom. It's the downturn's coming. The prices are going to go down to the 1980s price. You hear kind of like people say these sort of things, but it's hard to believe when we've been around doing this for a while, and the downturns are relatively short, like typically less than a year. Like this was 9 months of, let's call it 9 months, and the upsides are going for years. So it's it's kind of like the 80-20 rule. So
because even though I mentioned that you're a wholesaler, you still buy and hold some of these too.
Yeah, still buy and hold. One of the ones I bought a couple months ago, it's a long-term hold for us. Rental property, we'll put in a tenant, and that's it. Just keep it. So we'll keep collecting rentals every year.
What are you looking for in a long-term buy and hold? I'm assuming you're renovating too, and you're probably refinancing.
We typically buy them ugly, renovate, refinance, make them beautiful. I'm pretty flexible. Like I would say something I'm looking for is just ease of management at this point in my life. I wanted nice properties, nice areas. I would consider an apartment building, a multifamily. I probably want maybe a managing, unless if it's in my sort of neck of the woods where I have my other rental properties, like it's basically Scarborough to Oshawa in that corridor. That's where my rentals are. So if it was there, I'd consider self-managing it using my trades. Otherwise, if a deal would come along, I'd consider partnering with someone local who would do more of the management. But my track record is kind of like, in my area where I've already got the team, I've already got connections, and kind of easy. I don't want the cheap triplex in the worst part of town. That's not for me.
Right. So you're not buying the triplex in Sudbury.
No, nor even in the rough areas of, say, Oshawa or something.
Right.
But I love the nice areas of Oshawa. Give me a nice 2-unit in a good area of Oshawa, or
right.
that sort of thing. Yeah.
How often does like an apartment building show up? You get a caller for an apartment building.
Not too often. We get much more the single-family houses, or the houses with basement apartments, or some triplexes, things like it's usually the converted house. We did have a really nice purpose-built fourplex in Brantford. It was late last year, and we didn't make much money on assigning it. We did end up assigning it, but I was getting close to close on that myself with someone I know who invests in Brantford. He would be more boots on the ground. So I was kind of actually disappointed when we ended up assigning it and wholesaling it last minute. So, because it was a nice purpose-built fourplex at a great price. It had its share of problems, but those would get fixed over time.
Right.
Yeah.
So assigning is someone is basically buying the property off you. You make your fee, and then who is buying? Are they, because it's a lot of listeners have no context, for example.
Yeah.
For the listener who has no context what wholesaling is, what you do.
We still didn't finish talking about what is wholesaling, did we?
This will be great editing for Adam to make what is wholesaling a 90-second clip.
I'll do what I can. But it's basically, we go out, we buy, when I say buy property, we sign an agreement. So we get that document signed, an agreement of purchase and sale, purchase agreement, whatever you want to call it. But then we're not closing on the property. Another investor can step in. You can think of it like, you're just changing the buyer name. Think of it that way. Like you're just changing who the buyer is. Let's say it's my wife, my brother, or someone who paid me $50,000 to buy this property instead of me. So we're buying at a discount. Someone else wants this deal because typically they're going to flip it and make money, or maybe it's a rental property. Those are some of the typical ones. And it's a great deal for them. It's what they're looking for. So they're going to pay us a fee to close on the property.
And then who's your typical,
I call them buyer. Who's
Yeah.
your typical buyer? What are they buying? What are they doing with
Yeah,
it?
the typical, like the majority would be a flipper because they, a flipper will buy more properties per year typically than a landlord. So flipper would be number one, someone who's going to renovate, rent, and resell. Number two I would say would be the landlords, people who, it could just be a condo in Toronto or a condo somewhere in the GTA. They keep it as a rental. It could be some of these nice 2-unit properties, a bungalow. Like I have a number of these bungalows we've made as legal 2 units. So it could be that strategy, or certainly these not exactly legal 2 units. Like there's lots of houses with basement apartments. Some people some buy them, keep them as a 2-unit rental. It works much the same as a legal one. It's just some little bits of the building code aren't in place. That's all. So those are the top 2. We do get some homeowners that will move in, and typically they're also investors or realtors, or they're usually people
They're still in the business.
in real estate to some degree. Sometimes we'll just get a one-off home buyer as well, but the real estate investors are number one, whether it's a flipper or landlord.
And then the flippers. So through the downturn, something I've observed is the people that didn't lose their shirts were often the ones that were on the tools as well.
Right.
So again, I'm often leading with my questions.
Yeah.
Where I'm leading from is, for example, there's a lot of marketing out there that says like, you can be a flipper and still have a 4-hour work week.
Right.
Just hire it all out.
Yeah.
Are you seeing that? Are you seeing successful people being able to, not be actively on their project in a flip?
I suppose
that's sort of yourself.
The people who do are you got to buy well. So you got to buy well, and you probably you have some of your own capital, so you're not paying the highest private money prices.
Yeah.
There's definitely people, they're buying with maybe like 100% financed, even borrowing up for the rental cost. That's you better be in and out pretty quick if you're doing that, or have a really good buy price. So it's those people who are going to get if your cost of money is very high, and if you're buying or renovating with an expensive contractor, like those two things can hurt you pretty quick.
Right. Because you kind of have like your own team.
I've got I still do, like I have a team, like a full-time staff team we got 6 local people, and we still have some VAs as well, full-time. So we're up to 9 now, 9 full-time people. And I do have contractors I've worked with for, over a decade, and same with like trades as an electrician, plumber, all this sort of thing, different ones, different areas. So but with, between my full-time staff and my connections, and I'm not doing a high volume of flipping, but I might have 2 or 3 going on at a time. So it's enough.
That's a lot to Adam and I.
Yeah. Two is plenty. So, and there are times when we might not have anything for a couple months, but you still gotta be somewhat hands-on, and that for me it looks like now I do have staff who are doing it. They're not just doing my looking after my tradespeople and flips, but they certainly make it easier for me, so I can do other things. And they've got my go-to tradespeople, so it's really not that challenging. The more you do, the easier it gets.
Maybe easier for you, because I was trying to explain to Adam what you did for a living.
Yeah.
And then his question back to me was, how does someone get started in this?
Right. Well, definitely getting started, kind of with real estate, sort of with one property, whether it's rentals or flips or wholesaling. With wholesaling, I had, let's say, between me and my brother, we had sort of 2 rental-ish properties to start. Then I got into marketing, this wholesaling concept. You do some marketing, you attract discounted deals. So how I got started, just sending letters to houses in kind of older neighborhoods where I'd want to buy, or originally I had other investors, more seasoned investors than myself, who wanted to buy. So I just sent out letters in different areas, saying things like, I want to buy your house. I'll buy it in any condition. I'll do the renos, make it easy for you. That sort of concept. So like that's kind of the basic way to start. You don't have to overdo it. But if you're focused on buying a house in a certain area, well, you know where those houses are. You can drive right over there and throw in a couple hundred letters yourself. I remember like some townhouses. Like I remember hiring a local guy. I'm like, let's go deliver specifically to townhouses. You can do it real fast. We're gonna bang out maybe 500, let's say, in an afternoon. So if you either got time or you got money. So when you're first starting out, you tend to have more time, hopefully a little bit of money. So you got to leverage that. And if you go even like that example I gave, if you want to buy townhouses, whether it's for flips or rentals, then print yourself out a letter. If you want to speed things up, you hire a helper. It's always good to have helpers. And I'm talking like $15 an hour, $20 an hour, whatever it is. And you go in the afternoon, deliver some hundreds of letters, and see what you get from it. Hopefully, get some calls, and maybe you'll even get a deal from it.
Right.
Yeah.
And then when did you start doing more online advertising?
I know it was 2010, so I've been doing that for a long time as well. And yeah, definitely like the majority of our leads do come from online nowadays, and we've built up a significant web presence. So, we're very easy to Google and find our Google reviews and our website, and people talking about us on the internet. So we've built into that.
So Google's is what works best? AdWords, SEO?
Yeah, we probably still, Google AdWords is our number one source of leads. We get good leads from just SEO, from web searches. Those are probably the top two. Yeah. The internet's powerful these days, so people are searching for what they want.
Right. Yeah, but it is competitive out there, though. For flyer and web space, is it not?
Yeah, it keeps getting more competitive. I'd say like every year it kind of gets more competitive. So you got to keep getting better. I was just looking at my team and what we're doing, and we've had a lot of leads in the past, so far this year, but not many appointments. I can look at previous years, and we certainly had less leads, and we're doing more appointments. So it's kind of like sometimes you just get a little lazy is the bottom line. Right. And you just gotta, do the little things that add up. Like, if you don't prejudge the seller, you just go to the appointment, just go see the house instead of waiting for the easy, the no-brainers. Like, it's kind of like our team has been waiting for, the price has to be near perfect on the phone before they go to an appointment, or it has to be a major motivation, major problems. But so we're talking this week. Okay, new rules. We're going focus on appointments.
Yeah. If you're not busy, go.
Yeah, exactly. Because we have not been going to nearly enough appointments. They're not busy enough. So it's a new rule. Go to appointments. Like any motivation. It doesn't have to be high motivation. Any motivation, go. If you're not going, then you need to kind of tell Aaron why you're not going. Yeah.
I hate my neighbor. Good enough. See you at 12.
Kind of, yeah. And there are certainly rules, like houses we would not go see. Like if they're over leveraged, or if they're listed on MLS already, then there would be reasons why we don't go see them. But
yeah, it's funny because I put out a post on my socials about my team needs inventory.
Yeah.
Could you please send some stuff over?
Yeah.
And I was not specific enough.
Right.
And so over half the stuff was already listed.
Yeah.
Thanks.
Yeah.
I know how to use the internet.
Yeah.
If I was looking for that, I would have found it already.
True enough. Yeah. We ask for referrals as well, and we get sometimes too many of. Oh, this is on. Just send us the MLS list. Like, well, That's not what we're looking for, because it's easy for us to find that too.
So that's not what you're looking for.
No.
Wholesalers do not want listed properties.
No.
Got it. You said that you noticed that you said the competition still is consistently gets hard. I would have thought the downturn would have likely, because for example, like one of the education companies, well, a couple of them are actually gone now.
Yeah.
I'd imagine a lot of their students are wiped out too.
You know, I should probably pay attention to some of the names. You know, that's a good question. I should probably look into some of the smaller companies, see who's disappeared in the last couple of years.
Because I've noticed a lot of people have gone quiet.
Yeah, I know some people have. I'm just thinking of one person who's moved on doing other things, but it's still it's definitely consistent. Like there's a good number of competitors, good number of options for our industry.
Yeah.
Definitely compared to, I mean, think like 8-9 years ago when I first started, there was like this industry has grown so much in Canada and in Toronto area. Yeah, since I first started, it's night and day, which is good. It's great for the sellers, more choice for them.
And then was it just the downturn? Before we were recording, we were talking about the downturn and how it was more difficult for buyers to follow through with the actual purchase.
Right. Yeah. So we did have some firsts during the downturn. There were multiple deals of ours where buyers were backing out, and fortunately.
Sorry, were these repeats? Were these regulars or were these newbies?
I don't think we had any repeat investors who backed out. So it was the first timers, and fortunately, I'm thinking of I think it was at least 2 or 3 scenarios we were able to reassign it. There was one where it was day of closing. The buyer kind of just makes up an excuse
on the day of closing.
Like, oh, I was out of the country. I thought everything was all set to close, and I don't know. Anyways, they didn't close, and so they walked away from their deposit, which is a little smaller than I liked. And our company ended up closing on it. It takes us a few days later. I'm sure with less than a week we closed on it. But it does leave a bad taste for the seller when closing's delayed that much. It's not the end of the world either, but we made it good for the seller.
Right.
But yeah, we stepped in and we knew like it was not. This was during the downturn, so the price from when we got it under contract to closing, prices had fallen. So we did not want to buy it. We knew we'd lose money, and we lost money. We flipped it. It was in Kitchener as well, so it's not my area. If it was kind of in East GTA, then I might have considered. I probably would have kept it as a long-term rental actually. But being out of my area, I just I got to get rid of it. So
wow, you bought it knowing you'd lose money?
Yeah. So
why?
Just because
you couldn't just walked away?
It's a firm deal. It's just our company is like the guaranteed buyer. So if we do give different options to sellers, and we started during the downturn. We started being less of the guaranteed buyer, but there are still times when we're typically if we're the guaranteed buyer, we do buy at a lower price now. And then it's kind of like we go 2 different ways with our options for the sellers. So yeah, I'm willing to keep our company reputation to lose a bit of money. Yeah.
Because I don't think many people would have done that. Held true to the seller.
Probably not. Probably most people would have configured their contracts from the start to be easily back outable or something, right?
No, I literally spoke to wholesalers recently who just give it back.
Yeah.
The buyer bailed.
Yeah. But we do like that our contracts are a bit stronger for the seller, and we're we don't want to be backing out.
Right.
Yeah. So we and to make that happen, we do ask for bigger deposits from our investors. And hey, so we started doing more of this since the downturn. So we started increasing our ask for deposits when we have an investor. And buy price has to be right, but yeah, a lot of the things we're buying we're willing to close on.
So what do you see going forward? Like, does anything change in your plans?
Well, for our company, we are focused on growth. We see opportunity. Part of it's just within the company tweaking what we do, being better at what we do. Like we just see a lot of opportunity, and we expect to continue like growing and doing a lot more deals per month. I just like, listen, we're in the Greater Toronto area. There's tons of people, tons of sellers with problems. The only question for us is, are we attracting? Are making ourselves known? Are the sellers with problems going to come to us? When they get into these situations, like that's where our heads are at, and we want to be the ones who are able to help them out, handle the problems, solve the problems. So I just see more opportunity, and now with the market getting better, our investors and other buyers they're more eager for deals now. So it's easier for us. It's becoming easier just in the last month or two. It's getting a lot easier for us to wholesale those properties and do maybe tighter deals. Like we don't have to have as big of discounts as we did maybe 4 or 5 months ago.
So you're feeling that people are pretty much back? Your regulars are back?
Yeah, I wouldn't say we're not back to early 2022, but yeah, definitely the regulars are back. Yeah, and getting back in. Yeah, like I was, I got a couple calls myself from some regulars who haven't even, like I'm thinking of one who hasn't bought maybe 2 years, probably chilling out for a bit, but ready to jump back in. Some of these flippers are, they're people in good financial positions. So whether they make money whether they make more money this year or not, it's not a huge deal, but it's sort of a choice, right? Yeah.
So we talked about some problems in the industry, specifically before we started recording. I asked about red flags. If you could share, because I know some things we have to keep confidential.
Yeah.
But can you share some red flags, some general red flags around when you're acquiring property?
Yeah, and
because I had no idea.
Yeah, probably. Well, so
I read about it.
I shared with
no one I knew personally.
Yeah, I shared with Erwin earlier that we did get hit, and we bought a property from a fraudulent seller, and we closed on that property. So we currently now own the property, and it's going to be tied up with title insurance, legal issues for many months, probably a lot more months than I want to know about, or I will try to speed it up as best as I can.
Because you have money not working for you.
Yeah, it's money tied up, and insurance I find are never the quickest. So, and there's a legal process it has to go through as well. But this has been popular in the newspapers and the media. I'm sure people listening. So I remember starting to reading the papers, hear about this on the news, and let's say this somewhere late in 2022 and the past 6 to 8 months. So really, I know 4 people personally this has happened to. It's because I'm in the industry, the industry of wholesaling and buying and selling houses from people with problems. But we've all heard it's also happened on the real estate market. There's MLS listed properties this has happened with. I do think one thing, like we've had to start checking IDs of sellers, just being really cautious and aware.
Which you already did you not?
Yeah. We already checked IDs from the person that we bought from. So we've got their fake ID passed us. It obviously they've got good fake IDs to get through the lawyers, get through bank, to open a bank account, or to get money out of the bank,
and to discharge the existing mortgage.
There was an existing mortgage on the house we bought that got discharged.
So they got by the bank's lawyer too.
Yeah, they got past all kinds of lawyers and banks, and
which is totally crazy.
Yeah, it's totally crazy. Like in the past, like we never even used to worry about checking ID because we're kind of like a private buyer, but now we've had to step it up. But we always relied on the lawyers. Like, probably because it's since COVID, maybe it's gotten easier. People don't have to go in. You don't even have to go into the lawyer's office anymore. Like, there's a lot more. You can find you send them your ID, you have a video call. I don't know, maybe it's just getting too easy, but please don't change that. I like that. I don't want to go to my lawyer's office.
I like Zooming with my lawyer.
Yeah. But
my lawyer loathes me. I've been doing business for years.
Yeah. But to like something, I'm sure Title Search is going to work on solutions. Like something needs to tighten up.
Yeah, because they're eating it on the insurance.
Yeah. I'm sure it's not good for title insurance.
Yeah.
Insurance
companies do not like losing money.
No, they're losing money. They're telling me, because in my case, they've got private investigators looking into this. So I'm talking with like the title insurance. Title insurance has hired a lawyer to represent me. They've got private investigators, and so it's like there's all these people working on the case.
Yeah, they're probably investing in the lawyer.
Yeah,
and the bank's probably doing their own internal investigation. All these resources are being used on this.
It's pretty clear to me and everyone that it was a fake seller. But then, there's still always this sort of initially there's which seller is the real seller, but it's pretty obvious. But then it's like, is the actual seller involved with this somehow? Like, do we really know what's going on? So there's still all these questions. But yeah, and then it has to go through a legal process with land titles, which I don't know much about, but I know it'll take time. So where was I going? We do
red flags.
Yeah, like the red flags. Like as a company buying houses, we are a lot more cautious now. We have our spidey senses up for like vacant houses. If there's no like family living there, I guess like it could be, if there was a family living there, it would have to be sort of like a tenant who's selling behind someone's back or assuming someone's identity. But the scenarios we've seen, it's more the vacant house, and we're not quite sure the relationship between the fake seller and the real seller. Like, I believe one common scenario is someone will rent the house and then sell it. But for us, we see a common thread of sort of like vacant or almost vacant type houses as opposed to a lived-in house. But we're still like the property we bought, we met this fake seller there, and it's someone on my team met them there at least 3 times over a series of almost a month, or it was maybe 3-week kind of closing.
Right. They were committed.
So they were committed. Like, they seemed like a nice person, So I don't know. It's really like I don't have the ideal answer on how to stop this. We do need title insurance and the banks and lawyers to sort of help.
And this was an off-market deal.
It's an off-market deal. Yeah. Ours, yeah. That's what we deal with. And I'm sure
because for example, like if my tenants tried to sell a property, and there was a for sale sign that went up on the lawn, most of the neighbors know me.
Yeah.
So that would create, I'd probably get a phone call.
Yeah.
I have friends that live in the neighborhood.
Yes.
I have friends that work in the neighborhood. Like, hey, your house is for sale. Why don't you list it yourself?
and I heard from one of the other, not ours, but another fraud seller case that I heard about for someone else, is that's kind of how it was found out. The property was being flipped, and then so the new owner put a for sale sign on the property, and then the real owner drove past, and then what's going on? And then they discover all that sort of thing.
Right. So it makes sense for a fake seller to do it off market.
Yeah,
because you wouldn't want it online. You wouldn't want a long sign.
Yeah, you'd have to have.
Yeah, because then my friends would see it go on sale. Like, hey, your house is for sale. Like.
Yeah, it'd be much easier. It's much easier, I'm sure, for them to do it private. And I know some have been doing it on the market, which they probably have to really know who the seller is. The seller can't be someone who's going to look, or I don't know how they could do that, but yeah. So we got to be really careful. Yeah, it's wild times because past 6 to 8 months, a lot of this has been happening.
Crazy, man.
Yeah. Can't trust people these days.
What else is happening? Wife and kids are good?
Yeah. My wife, she's busy, with me in real estate, doing her thing and helping me with our thing. So the child is, we bought a cottage in the past few weeks, a nice fixer-upper cottage. So
Sophia, came it through your marketing?
Yeah, through my marketing. I got a fixer-upper cottage that's in a good area for me, like Kawarthas, because a lot of my family's out in Oshawa. So it's good for me and my family. So my
Were you
my daughter's excited.
Was any of your marketing targeting a cottage, or they just happened to come across your marketing?
I do, yeah, I do marketing for cottages. So we do have some internet advertising specific to cottages. So we don't get we do get some cottage leads and waterfront properties. It's it's not our bread and butter or anything. Our sort of bread and butter would be single family homes or duplexes in the cities, but I have been but some intention to get a cottage. So there it is.
How bad is it? You said fixer upper.
It needs everything new inside, new kitchens, bath, but it's nothing too crazy. It's a I want to say late 80s built house. So like it's a house, not a 3-season cottage or anything. So it's good.
On the water?
On the waterfront, yeah, waterfront. So we'll use it as a family cottage for some years. If we don't like it, we'll rent it or resell it. Yeah, see how it goes.
Right. So you have multiple exits?
Yeah.
Right.
Yeah.
You're not highly leveraged?
No.
Right.
No. But after we renovate, we'll refinance. Yeah.
Right. For like a Schedule A, or you can
probably,
or
we'll see what I can get these days. I'll probably I'll probably talk with the big banks. Yeah.
So I'm trying to be. Apologies for leading with my questions.
Yeah.
You're not highly leveraged. You don't have super expensive for private mortgages.
No.
Promissory notes and second mortgages.
No, I'm not at the moment. No, but I do use short term private money, and it's typically 8 to 10% sort of money, but it'd be under 6 months. I'm looking to do that. It's rare when I've had that for projects over 6 months. Yeah.
When do you? Let's use today's environment. When would you go back to using private money? 6 months, 8 to 10% annualized.
For some flips, and when we do buy one of these houses where it's really run down, like myself, I've been doing this a while, so I have some large lines of credits on properties and different ways to get money.
Right.
But yeah, for houses in really rough condition, you're not gonna get a good loan from any bank, and especially if it's a fast close, a week or two. It's typically usually only private lenders who will do that. I've had, if you work with the same lender quite a bit, I have had experience with the big banks. They can do in like less than 2 weeks and things like that. But it's pretty odd, and
it's stressful.
It's been a few years ago, so things probably keep getting slower with the big banks.
Yeah,
I'm trying to remember the last time they did something fast.
Yeah, anyone big I find is slow.
Yeah, they seem to be slow. So.
As in they're slow to get it done.
Yeah, oh yeah.
2 weeks, I wouldn't dare ask.
I would not count on them for 2 weeks. If it would be, hey, if you can do it in 2 weeks, great. Otherwise, I'm closing on it with my line of credit.
Right.
That's kind of what I would.
You have your plan B.
I'd need a plan B. I can't count on them for a fast close.
Because like what my lawyers told me about one of the well-known B lenders, I think he says 1 out of 3 do not close on time.
Wow. Yeah.
Because of the lender.
Yeah.
Can you imagine that you're waiting around Friday afternoon? Waiting for banking instructions, and it doesn't come.
Which reminds me, I never like to close on Fridays.
Yeah.
Yeah.
I don't know why some people are obsessed with closing on Fridays.
Yeah, it's a terrible day to close because, or right before a long weekend, because then if any delay, like what you said, 1 in 3 or whatever, then you got to wait till the Monday, or if it's a long weekend, you're waiting 4 or 5 days, whatever it is. So it's just a nightmare.
What do you like to close on? Monday?
I like Tuesday and Wednesdays.
Tuesday, Wednesday.
Thursday's good too, but sometimes I remember closing on a Thursday, and then you find out it's long weekend. It's like, oh, I didn't know it was a long weekend on Friday, and then. Something that happened to us in the last year. Closed on a Thursday. It happened to be, and there was a delay. And then it's the long weekend.
We had a deal recently where it was the conditional days were business days, but we just had Easter.
Right.
And no one factored that in.
Yeah.
So just be careful out there, folks.
Yeah.
All right. Is there anything else you want to cover?
Oh, that's That's the gist of it. I can always, talk about how people can find us, that sort of thing.
Hey, of course.
but,
Where can people follow along your journey? Where can people learn more about GTA
Yeah,
house buyers?
like,
I see your ads all the
yeah,
time.
you can Google GTA house buyers, and we'll probably follow you around on the internet on retargeting advertising. But investors like to learn about us from our investor website, housedealsgta.ca. So people can go there, and we are doing deals across Ontario these days. Like, we do have a kind of golden horseshoe focus. Of course, Toronto, GTA, Barrie Aurelia, KWC, down to Niagara, and like Oshawa, Clarington, all that area. But, we've done deals in the past year or two in Sarnia, Kingston, Huntsville. We're getting all over. But yeah, so if people want to, go to our website, see our deals, tell us the areas they're interested in, they can, sign up, and we can send out the deals that sort of match their criteria. And that's just housedealsgta.ca.
And if you're driving, folks, I'll have it all in the show notes.
Perfect.
Aaron, thanks so much for doing this. It's always I joked with someone that like sometimes I need a nice interview for like a palate cleanse, as they call it, because sometimes it's like we have some disaster stories on this show.
Yeah.
So it's nice to hear. It's always nice to have a nice guy on the show. Like, again, like the fact that you closed on a wholesale deal that you knew you were going to lose money on.
Right.
Would anyone do that?
Don't know of any of those stories.
Yeah, and that's the truth about real estate investing.
Yeah.
I think it's a great place to end it. Thank you, Aaron.
Thank you, Erwin.
Thank you for watching. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy that I personally use in a virtual free training class every month. Go to investortraining.ca/YouTube to register for our next class. That link's also in the description as well. I publish at least 2 to 3 videos a week here, so subscribe if you want to keep learning from seasoned investors like myself and my guests. And if you're just starting out, feel free to ask questions and comment below, and I do the best to answer each of those comments and questions myself. Again, if you're ready to learn the nitty-gritty about real estate investing from a professional investor, register for our next virtual class. That's at investortraining.ca/YouTube. Thanks again for watching. See you in the next video.